Bollinger Bands are one of the most commonly used technical tools in short-term trading. Who better to tell us more about them than the man who came up with them, and that is John Bollinger. I'm delighted to say he's with us now. Thanks very much for joining us.
Oh, thank you so much for having me on.
Before we get into what Bollinger Bands are, tell me a bit about how you got into trading and what it is you enjoy about trading.
I got it. It's sort of a funny story. My mother was getting near retirement, and she was having trouble with investment advisors and brokers, dissatisfied. She knew that I had some interest in stocks and such like that, and she asked me if I would look after her retirement fund. So I started trying to work on it using fundamental analysis and the traditional approaches, and didn't have very much success. And I found that the more attention I paid to price, the better I was doing. So I gradually became a market technician, and I'm happy to say that my mother enjoyed a long and very happy retirement.
What is it that you really love about trading and the markets?
You know, markets are as old as man. It's an essential way that human beings interact. So there's two aspects that I like a lot. One is just the essential interplay of information. Everything in the world is captured in the trading process in one way or another. We can trade everything from Forex to commodities to stocks to indexes all over the world and such. So all that information is impounded. And so for somebody who's interested and curious on a grand level, this is a fantastic thing. Second thing that I find is the ability to serve people and to help people out. You know, people can't, this is a hard business, right? Trading requires full attention and focus. And you know, people who are professionals getting on with their lives and stuff, they can't really invest well because they don't have the time to devote to it. And they may have the skill, many do, but it's simply the time to do it. So I really enjoy the process of serving people and helping people with their retirements and such like that. So the investment management process is the other side of it that I really like.
What's the biggest mistake you've made throughout your sort of trading career?
The biggest mistake? So for me, the biggest mistake was getting involved in a market that I thought I understood, but in fact, I didn't understand as well as I thought it was. It was a long time ago, but it was a precursor to the problems we had in 2008. Before we had the problems with those collateralized mortgage obligations, which what drove the crisis in 2008. 10 years before that, we had the same problem in government collateralized mortgage obligations, only there was no credit risk at that time. And I had gotten pretty involved in trading them, and a panic hit. And people thought that, you know, they just ought to sell these things wholesale, and the prices were marked down in a period of a couple of months in a way that bore no relationship to reality. And I simply didn't understand what sort of leverage people would employ in using these.
What lesson did you learn from that?
To stick to your strengths. My strengths are really individual stocks, ETFs, and stock indices, and I really learned to stick to my knitting, to work in the markets that I knew best and understood best.
What are the other key tips or rules, I suppose, that you think traders need to bear in mind?
You know, I get asked this question all the time, and I give an answer, and everybody thinks that it's a flip answer, or you know, somehow it's facetious, or I'm not serious. But I really am. The name of the game is discipline. It's middle, beginning, and end of the game. To the extent that you can take a disciplined approach to technical analysis and the markets, and that you can try to keep your emotions in check and deal with this as rationally as you can, I think your odds of success will improve dramatically, almost in a linear manner with your ability to impose discipline. There's so many undisciplined traders out there, and you know, I feel sorry for them because, you know, with some focus, I think they could be much better traders.
Talking about making people better traders, Bollinger Bands. Where did they come? How did you come up with them?
So we used to have fixed width trading bands. That's what we had when I learned the business. And the problem was that you had to reset them all the time as market conditions changed. And when you did, if you were bullish, you would draw a bullish picture. If you were bearish, you would draw a bearish picture. So you're constantly letting emotions into the process as market conditions changed. So I was looking for an adaptive way to set the width of the bands automatically. And I was an option trader at the time, so in order to be a successful option trader, you have to have a handle on volatility. So I was studying volatility, and one day I had this epiphany that you could use volatility to set the width of the bands. So after some experimentation, I found out that that was indeed the right answer.
So talk us through how best to use them.
Well, Bollinger Bands are a tool, they're not a system. A lot of people believe that they're a system, so they think that you should automatically sell at the upper band and buy at the lower band. Nothing could be further from the truth. What Bollinger Bands do is answer a question as to whether prices are relatively high or relatively low. So we can use the answers to that question to do things like identify W bottoms in the market or long-term sort of rolling tops in the market. In addition, we can take price action within the bands and compare them to supply-demand indicators like accumulation distribution and arrive at rational buy and sell decisions wherewith we can take the emotions out of the trading. So the answer is there's different uses for Bollinger Bands for every trader out there. It depends on what they're trying to do, what they're trying to accomplish. Some will use the bands on very, very short-term charts. Some will use the bands on much, much longer charts. Some will try to do mean reversion trading where they sell the upper band and buy the lower band. Some will look for trend trades where we walk up the upper band and walk down the lower band. It really depends on who the trader is.
For you though, when you were developing them, what kind of length trade did you have in mind, and what do you think they're ideal for?
So it was a really different environment when I started. Commissions were very, very high, and slippage between the bid and ask were very, very wide. So trading costs, total trading costs, were very high. So very short-term trading was almost impractical because you go for a little trade, you make a point and a half. Well, maybe you paid a point and a quarter to make it. It seemed absurd. So we called ourselves swing traders in those days, and we looked for the big moves on the daily and weekly charts where you could make 10, 20, 30. Maybe, if you were really good, 40 or more percent, because we had to overcome those trading costs. And the other thing was, it was very hard to come by quotes. You couldn't just have quotes shipped into you automatically. So we often got our quotes from the newspapers. So daily and weekly charts, longer term trading, that's what I cut my teeth on, is what I still love today.
In terms of asset classes, it works across all asset classes, but is there one in particular that you feel it works best for?
Well, I started on stocks and options. That's still my first love. Indexes now are a very vital and very interesting environment. I do a lot of work in there. And, I think that there's a huge amount of interest in Bollinger Bands in the Forex markets as well. They have slightly different characteristics in the Forex markets, and Forex traders seem to like them very well.
In terms of actually using it on a day-to-day, in terms of hitting the top line, the bottom line, troughs, bulges, squeezes, talk to me about how you use them to determine positioning.
So I'd like to, like every bargain hunter on the face of the planet, I like to see if I can find things at bargain prices, and I like to see if I can sell them back at somewhat higher prices. So I'm very interested in the sort of ideas where you come down and tag the lower band, and you have one of these supply-demand indicators like accumulation distribution or intraday intensity that telling you that there's positive action going on behind the scenes. So I wait for the market then to tick up and confirm that idea, and so those are really my favorite trades. My other sort of favorite trades are a sort of trend-following idea where you come up and you're strong enough to get to the upper band, and then repeated tags of the upper band. We call this the walk up the upper band. I love that sort of trade.
the squeeze and the bulge, it's all about living and dying, as you so distinctly put it in your speech. Talk us to how you use that.
So a squeeze occurs when the bands are very, very tight together, and what we do is we look back in history to gauge whether they're very tight together. And so that's the environment in which trends are born. A bulge is exactly the opposite. The bands are spread very wide apart, volatility is very high, and that often occurs at the end of trends. So I say that a squeeze is where trends are born, and a bulge is where trends go to die.
As with any indicator, Bollinger Bands, though, are not something you take on their own in isolation, are they?
No. I love to analyze news in relation to price action as well. For example, when the market gets a piece of news, I try to judge whether, in theory, that news should be bullish or bearish. So if the market reacts bullishly to the bullish news, that's just a confirmation. But the real bit of information is when the market doesn't do what it's supposed to do. So if you get a bit of bullish news and the market sags, or if you get some very bearish news and the market rallies on that news, that tells you that there's something going on behind the scenes, that the strong hands, the long-term institutional investors are accumulating stocks, and you ought to pay attention and try to do that yourself.
What are Bollinger Bands and other indicators telling you about what's happening in the markets at the moment?
No, I'm actually quite bullish on the U.S. market. I think we have quite a bit to go on the upside. Maybe in the mid-year, maybe as much as into the third quarter, the beginning of the fourth quarter. We keep a large number of long-term timing indicators. Each week I produce a free market timing chart pack. And you can see these indicators on display. And back in December 24th, when we got that panic low in the market, in the weeks afterwards, both at the low and the week afterwards, we got a lot of important intermediate to long-term buy signals. And those traditionally have very long lead times. So that suggests to me that this rally has very long legs, at least into mid-year and perhaps later into the year.
What do you think it will take to turn that, for that not to happen?
Oh, I think actual arrival of tight monetary policy, or another possibility might be a full-out trade war. It's hard to know exactly what will happen, but one way that we'll know really easily is when we start to get bullish news and the market stops going up on it.
Where do you see the biggest opportunities then at the moment?
Oh, I think probably the biggest opportunities on a global scale are in the emerging markets. They got very battered down in second half of 2018. And I think there's still some terrific opportunities there. If that's not to your taste, I think the major markets, the equity markets, look very good here. The uncertainty created in Britain by Brexit, look, the market's trying to resist that for all they're good for. I think that's a really strong message. I like the FTSE, for example.
Of the emerging markets, any particular area, or emerging markets as a whole?
No, as a whole. And I think that if you're going to do it, you really ought not to play one. You ought to diversify yourself across a basket of them.
John Bollinger, thank you very much for your time.
Oh, thank you so much for having me on.